Hey, I'm Gene Goldman, and here's a look at the week ahead. Well, we had a pretty good month for U.S. stocks last month as the S&P 500 had its best month since November of 2020. Driving this rally was optimism around the so-called Fed pivot, where the Fed goes from raising rates today to cutting rates next year. Driving this Fed pivot is optimism around the combination of 2 points. Number one, peak inflation, that we're past peak inflation, and number two is that economic growth here in the U.S. is slowing down. And we saw evidence of this last week as GDP fell for the second quarter in a row. And that's a definition of a technical but not official recession. And we'll be talking about that for weeks. So we saw a disappointing second quarter GDP, but that data is only through June. This week, we get our first broad readings of July data. And this is so important because the Fed last week said they will emphasize data dependence in their decisions on a go-forward basis. So we'll get two key data points. Number one, we get the ISM indices for manufacturing and services. Both of these are the first broad look at the July economy. And as we've talked about before, above 50 for the indices are expansionary, below 50 is contractionary. And the consensus is that these will remain above 50, but definitely slow from their June levels. And then on Friday, we get the big report, the July payroll report. And this report is so important because Powell in his comments last week, and Jay Powell is the head of the Fed, he said, despite the weakening economy, he has confidence that we are not in a recession because of the strength in the labor market. So what do we expect from this report? We expect payrolls to slow from June's 372,000 to about the consensus of 250,000. Why is that the case? Well, there's been a recent pickup in jobless claims and the mixed unemployment components that we've seen in some of the survey data. We expect the unemployment rate to stay flat at about 3.6%. And on the inflation front, expect wage growth should be modest, but pretty similar to June's readings. If you take all this payroll data together, they all point to a slowing but not collapsing jobs growth. Thank you for listening. For more information, please follow us on Twitter at SateraIM and see you next week. Thank you.